A warm welcome to everybody. Good to be with you here this morning. It's the 4th of February, guys. And once again, you're going to hear it. We're on the 4th day of the second month already, 2026. Welcome to the opening bell. It's Ashley Reeve here, guys. What a pleasure, what a blessing being with you. Before we do get started, remember the information we discuss in this video is opinion. Please do not construe this as advice in any way. Come on. Morning. I see it, Tabatso. Good morning. Tato, I see it. Transfer, good morning. Round of applause for you guys being here. Let's get started with today's session, ladies and gentlemen. So a very interesting one here, guys. Really interesting start to the year, obviously. One cannot forget that. Very political, obviously, with a lot of the jabs coming out of the U.S. The president firing away at, obviously, we're getting the Venezuela saga, then the Greenland and tariffs. And, there's quite a bit going on. And we just got this morning the one-year extension of AGOA for Africa's, for African countries to do some exports and not getting any tariffs on those products for 1 year, which obviously boosts the economies. And obviously that was taken away, but it's brought back again, which is a very interesting one, right? So we want to check out, a couple of, assets this morning, specifically 4 of them. We're looking at the gold price, we're looking at the silver price, we're looking at the GBP USD, and we're looking at the NAS 100. But let's start it off maybe just with some fundamentals first, just so you guys are well aware of what is happening around you. I think that's going to be key here. Maybe just from a New Zealand, the Kiwi, New Zealand dollar there, we're seeing there's a lot of job data that was mixed. Unemployment rose to 5.4%. More people without jobs, but the employment still grew, all right, meaning companies are still hiring. It does tell us, or it connotes to the Reserve Bank, and saying that the economy is slowing, but not weak enough to rush into any of those cuts, which is obviously different from what we've been seeing for a couple of weeks, maybe a month, even 2 months now, that they are looking to hike. But the interest rates are likely to stay unchanged for now. They're looking at possibly July, I suppose. We're going to be seeing what's happening. And if a currency gets a rate hike, it does tend to strengthen. All right. So NZD pulled back a bit, but there's not a lot of movement happening there right now. The Japanese yen there weakened to around 156 per dollar. It's this 4th straight daily loss. Japan is heading into a snap election as well. Ash, what's a snap election? Well, every 4 or 5 years there is an election that takes place in the country, and if there's any government issues internally, they have a snap election. That means they snap that specific period into smithereens, and they call for a meeting now to try and understand what is cracking, okay? So many times it's monetary policy. In this specific case, it's about tax cuts, more spending, and markets worry that this means more debt, which weakens the currency. So there's a bit happening in the Japanese economy, and we'll see a little bit, further on in the week what happens, yeah? Also, the US dollar, guys, partial US government shutdown is delaying the key jobs data. So we're not expecting NFP this Friday. We were very amped and excited for it. But we saw in the past that when there was a government shutdown, we did not see any NFP data. So it's being delayed. Investors are lacking a lot of fresh information on the US economy. Still, the dollar remains supported, all right, after a less dovish Fed chair nomination in the capacity of Kevin Wash, new Federal Chair, Reserve Chairman. Strong U.S. manufacturing data also came out. Impact, guys, dollar remains firm, but a little bit cautious to investors. Markets are still expecting 2 rate cuts later this year. Not so aggressive, but, we could go to 3. It's a possibility. Head of sales and key individual over at TD mentioned expecting perhaps 3. That's Xander, 3 this year. All right. So we're going to see how that goes. And then obviously, guys, we cannot forget silver and gold, which I'm going to deal with the specifics now on the technicals there. With silver rebounded after $87 per ounce. Brutal sell-off there. Forced selling slowed down, though. Buyers stepped in at a lower price, and the rising geopolitical tensions is obviously boosting the demand for the safe asset. At this point in time, I'm waiting for this 4-hour time frame to actually close. Yeah, Ash is looking to get into this one. I am anticipating a price to possibly push to 115 back to that high. That's what the technical structure dictates. Once price comes from an area, it generally moves back to that zone there. But it's a beautiful move to the upside. Suppose we're going to hold this for a couple of days. We had a strong sell-off there. Like I said, the forced selling. So a couple of days could take us back to there, perhaps 2, 3, maybe even 4. It all depends. But looking for a close here. Not only that, it's not only the close of the 4-hour, but also the oscillator going into the buying continuation zone here after the 55 point on the RSI. All right, I'm using the RSI as part of the oscillator family. Different indicators you can find on the MT5. All right, there's quite a few of them. You're going to find average to range, bears power, bulls power, the commodity channel index, also known as a CCI. You have the MACD force index, stochastic Williams percentage range. So there's quite a few oscillator indicators. I'm specifically using the RSI here. Very easy to use. Get into education. We do chat about it, how you can use it more effectively and more proficiently. And so just waiting for an uptick here, and we're looking to get into silver as well. Gold, already pushing very nicely here. Investors bought the dip, after that dramatic sell-off over there. A lot of profit taking at the record high there of 5,000, 5,500, 5,600 if you include the wick over there. And obviously, guys, rising geopolitical risk is increasing the buyers here, the buying appetite, all right? Low expectations for the fast U.S. rate cut. Therefore, gold, safe haven, demand is in focus. All right, so gold does remain a favorite right now. Volatility likely, meaning that the ranges can move from one place to another in a short amount of time. That's the volatility that we're referring to, all right? But long-term trend stays bullish. So 5380 is what Ash is looking at this point in time. And then obviously after that, a bit of a breathing space, 550.44 is what we will be checking out on the gold price. GBP USD also looking phenomenal here based on the dollar or the softer dollar. We're seeing a bit of support that has now jumped up in the GBP USD. It's between the 1.36226 and the 1.36627. That's the support area that I've highlighted there. It's also gone above a very, very strategic resistance, which was somewhere over here around 1.37073. And I've been waiting for some pushes to the upside. You can see it happened now. Now, can price extend back into the baseline here? Yes, absolutely. That's technicals 101. But we're not spooked or crazy about that, because that's what price does. All right, so we're expecting it to move up to 1.38369. That's back to the area it came from. This entire structure has come from that specific resistance over there. So resistance there, support here. And guys, this is not a support and resistance strategy at all. We're looking at the intricacies of the price structure, looking at the price movement, and we are using tools to help us understand where the momentum is coming from. You can use moving averages to do that as well. All right, so it's not just your easy peasy lemon squeezy 1 2. There we go. We're gonna get in because we have a candle close. We don't deal with things like that. All right, we have a plan. There's a setup that's involved here, and we have to identify key points, like you see with that blue area or the blue trend line over there. That's a support zone that has already started on the much lower time frames. All right, so that's what we're looking to trade here intraday, not long term at all, guys. We're only looking to capitalize about 116 pips there. So it's really short to medium term here, guys. Really not long term. If you look at the daily frame or even the monthly frame, you can see we are literally extracting just those couple of pips. If you take the entire movement into consideration, that's all that we're capitalizing on at this point in time. All right, that's it. That's that move. Intraday trading, day trading, has its differences, but more or less is the same. You're looking to profit within a shorter period of time, yeah? And then we also have the NAS 100. Ash is looking for a 15-minute frame over here, guys. What we have seen here, though, with the U.S. stocks futures, NAS 100 being one of them, Wall Street did fall, led by the tech and AI stocks. That's where you see that big movement coming down here. But since has found a bit of support here now. All right, you can see it. I've highlighted it for you so you can see. And then investors, obviously, they are rotating out of the expensive tech. Weaker earnings is obviously guiding, from some of the big names over there. And the impact really is tech remains vulnerable. The focus now shifts to upcoming earnings in Alphabet and Amazon. So we're expecting some movement there. If I can just get a nice push to the upside, which is moving in my favor right now. All right, remember, if we're scalping the market, we're not looking to hold. But just so you do know, from a higher time frame, the indices are at a pause. It's been at this high for a couple of weeks now, consolidating. So what Ash is basically telling you is, I'm not trading the actual overall movement here right now. What I'm trading is the fractional movement in the price, all right, from one place to another. That's it. I'm not trading it to that place there. Literally from here to there, that's it, all right? So it's really intraday, day trading style that's happening over here. And obviously, guys, we cover a lot of this in our education, world-class education. We break it down. We simplify it for all of our students. If you've been with us in our sessions, you'll understand that. If you have not been, you got to get in there, all right? So make sure that you do visit your account manager. There's our email address, care@tdmarkets.com. If you don't know who your account manager is, there's the guidance already. Our support team, we call them super support. They'll give it to you in seconds, minutes of time. They really, really push very hard. And then obviously, if you're a brand new, looking member or potential member of TD Markets here, www.tdmarkets.com. I do slow it down there so that I get all the W's in, all right? You can visit our website and make sure that you sign up. Then, guys, what's very important about that, we got different account types, from your standard account to your cent account to your max account. There's quite a bit. If you, in Islam, we got an Islamic account for you as well that you can obviously look for and look at. But we got quite a bit of options on the table for you guys. All you got to do is just get in and see what the system has for you. All right. So this morning, guys, very, very simply there, we're looking at the gold price, looking bullish here. We're looking at the silver price, bullish. GBP USD also bullish, and the NAS 100 bullish. So all four of them looking for some upside. Please stay tuned. There might be some corrections, so please do not be surprised if there's any corrections that comes in. And if you're scalping it like I'm doing it here short term right now, in and out, once you've made your target, you're more than welcome to get out. I mean, we will not place any limitation on that. So again, guys, there's a short, medium, and long-term view of the price, and you have to know which one you are trading. All right, but that's it from me here this morning, ladies and gentlemen. Maybe just one more thing there on the Bitcoin for all the crypto heads here, guys. We did see that there has been, the drop there to the $72,800 for Bitcoin. Lowest since November, heavy focused on liquidations of leveraged traders. Large fund outflows. That just means big institutions have obviously taken cash out. The sentiment did shift after the months of optimism. That's just attributed to the geopolitical uncertainty, or the political uncertainty at this point in time. But, once those cuts come in again for the U.S., we're looking at a lot of guys taking their money out of the U.S. and exposing it then to much of the riskier assets for storage of value, and to obviously push up with some of the crypto there. Don't forget TDME, TD Markets Exchange. We have our own platform, tdme.io. And you can actually visit that and make sure that you get in with holding positions. Yeah, or you could trade derivatives intraday as well. The great thing is that, from a volatility perspective, once those cuts come, we can expect price to move at a rapid speed. And the great thing that we're seeing, secondly, is that this drop is gone and filtered across various crypto assets. So that gives more opportunity, all right? That gives more opportunity because there's a lower price that many guys can get into. So long-term adoption remains, but short-term pain isn't over yet. So we're just waiting. We're waiting a little bit, and waiting and being patient is part of the trading game, all right? It's part of it. It's all part of it, all right? So, guys, have a fantastic one. Good to be with you once again here. Ashley Reeve here with the opening bell. I'll see you guys when I see you. That will be later on in the week. I know that will be on Friday. T will be with you guys tomorrow. Don't forget, Trading Room tomorrow at 2 o'clock via YouTube. We're looking forward to being with you guys. That's it for me. this morning. Opening bell. Ashley Reeve here, signing out. Ciao, ciao.